The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning, happy Tuesday, and welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you on a Tuesday where we've got equity markets rebounding a bit after a slight sell-off yesterday. But the bigger picture when it comes to stocks is while the S&P 500 itself has been remarkably flat over the last couple of months. We are now sitting at 74.80, let's call it, on the S&P 500, which is just about precisely where we were back on May 15th of this year. So really no movement for the last couple of months as investors are digesting what are quite high prices on stocks combined with risks out of the Iran war and questions about the continued AI trade. But we do have stocks rebounding a little bit today, and then earnings that will be rolling out for the next couple of weeks. The next big heavy hitter comes tomorrow after the bell with both Alphabet and Tesla reporting earnings after the close. Plenty of others going this week as well. We had Novartis, Schwab, Danaher all report earnings this morning. We will have Philip Morris, GE Vernova, Texas Instruments, IBM all reporting, Intel, RTX, T-Mobile, Thermo Fisher. So not that they aren't also important to markets, but when we talk about a company like RTX now, since they combined with United Tech, $260 billion market cap is nothing to sneeze at, but with Alphabet now being nearly $4.25 trillion, it's not going to move markets in the same way. Next week, we have a even stronger kickoff in the earnings department, in addition to a Federal Reserve meeting and interest rate announcement. But next week, after the close on Wednesday, we'll be hearing from Microsoft and Meta, as well as Apple and Amazon, so a very heavy-hitting week next week. While markets themselves overall, S&P 500 relatively flat for the last couple of months, the individual components underneath the hood have not been terribly flat. In fact, they've been quite volatile when you look at single stock volatility. And so this earnings season may make quite a difference depending on how one invests these days. But the overall question, I think, when it comes to markets, I know we're going to talk about what I would consider distractions today with tariff announcements, renewed hostilities in the Middle East. The question that seems to really matter at this moment in time is, are the companies that are pouring this much money into AI seeing any return on investment on that spend? And I'm not sure that answer to that question is going to matter this quarter, but it's clearly what investors in the S&P 500 are asking, and not even the S&P, globally are asking themselves, because not only is the U.S. stock market tied to this stuff, but the Korean market, the Chinese market, and just about every market globally, other than maybe Europe, is pretty tied to how well or poorly these investments pay off.
Yeah, as an investor, I don't care about last quarter's earnings or even
Sure.
last year's, to the extent that they're predictive and their usefulness in forecasting is actually pretty weak. But to the extent that I may think, we're going to talk about GM in a little bit now.
Sure.
Not an AI stock, not yet anyway.
They might want to be. Ford tried, so we'll see with the GE. Or sorry,
Right.
GM.
Right. I guess my point is I care not about, when you're buying any asset, past performance. We all know it's not predictive, that little disclaimer
Sure.
that appears on advertisements. And that's there for legal reasons. It could also be there for statistical reasons. Earnings don't correlate well with future earnings. And the reason for that, of course, is that the economy's twists and turns are unpredictable. This AI investing frenzy will come to a screeching halt in the event of a recession.
Yes.
It'll reverse quickly, and presumably so will the fortunes of those the fortunes of the stocks of those companies. Longer term, will it pay off? Depends on what you mean by pay off. These are all bigger questions than we're going to try to answer in this segment. Will they pay off for the companies making the investments today is really the question for investors
And
today. Not so much. Go ahead.
And history would say no.
Yeah, if you look at past revolutions,
Sure.
Radio in the 20s, electronics in the 60s, and you can go farther back than that if you like railroads and canals. Overexcitement is followed by overinvestment and oversaturation and destructive competition and defaults and retrenchment. These things still change the face of the economy as AI. I was going to say, sorry, I'm slamming the table. I don't even feel that strongly about this. As AI undoubtedly will, according to the experts, but it doesn't mean that today's leading firms will be the winners of tomorrow.
That's the critical piece, right? It's not that the technology isn't incredible. It's not that it won't change the world. It's not that it won't make work different for all of us. It's very simply that history has proven that the companies that lead the way in investment and are treated as winners in the early stages are not often the same companies that end up being the big owners and capitalizers on the new technology. And most certainly, even those that do end up continuing and being dominant in that space, not all of them end up being dominant and continuing.
Only a few
can,
space. By the nature of it's a capital intensive business.
Sure.
So there will be only a few winners, and the irony, and it's kind of a perverse one, is that everybody's got to overinvest today. That sows the seeds of the demise of at least a few of them.
We've got stocks up in early trading, as I mentioned. We've also got oil prices moving higher on continued tensions between the United States and Iran, as well as surrounding areas. Oil prices up to $85 per barrel now, up another 2.25% this morning as we enter the 10th day of hostilities re-escalating in Iran. Not only do we have Iran, who is... we keep using the word blockading the Strait of Hormuz. I don't know that that's an accurate term for it, but I don't think we have another word for it. There is no physical vessel blockade, but when you can use tiny drones that are very difficult to defend against to strike any vessel in the strait, you've effectively stopped traffic. So we're calling it a blockade and has been so far pretty successful. In addition, Iran-backed Houthis on Monday said that they would be imposing a maritime blockade on Saudi Arabia. The big story here being that Saudi is one of the second largest oil producer in the world, maybe, have been rerouting a lot of their oil flows through the Red Sea. Should the Houthis in Yemen be successful in blockading here, then we just have another supply of energy that goes offline, or if not goes offline entirely, then gets decreased pretty substantially. And one of the questions that has been risen, we saw oil prices come way down. Why didn't we see gasoline and diesel prices come down with it? And the answer isn't all that complicated, but the answer is that Russian energy infrastructure has been largely taken offline due to the escalations in Ukraine, and to the point where the Russians are no longer exporting refined products. The Chinese, who have been decreasing their purchases of crude oil, are therefore exporting a lot less refined product as well. You've got several refineries throughout the Middle East that are either offline or not able to export. And then you've got the threat now of this new waterway being threatened. And so, therefore, the logical price move is upwards for the time being. And we are right back to where we were a few months ago of, hey, we can probably navigate this for a few weeks or months, but should it take an extraordinarily long period of time, then the idea of shortages and prices back in the hundreds on crude oil is perfectly rational if we end up on that path.
I mean, the day-to-day on this stuff is just bewildering. I've almost given up trying to keep track. The names are unfamiliar. The players are acting on age-old animosities toward one another. To me, the larger point here is that things are going to be more expensive for a while. Oil and its derivatives, chemicals, etc., shipping generally. If things are diverted, that's going to put pressure on supply chains elsewhere. All this stuff that we're hearing every day, the constantly changing news flow, it all to me just screams inflation. Now, that doesn't mean double-digit inflation. It doesn't even mean a few percentage points higher than we're at today, roughly 3.5% if you just use the year-over-year on CPI inflation. It just means elevated inflation. Now, part of that depends on how the Fed responds, something we'll talk about. Go ahead.
No. Please.
Oh, okay. Sorry. So, if you're overwhelmed, as I am, by the detail, are we in a ceasefire? Are we not in a ceasefire? Who's firing missiles at who? Are the Houthis involved or Houthis involved? I don't even know how to pronounce it. Okay, it's a mess over there. It's been a mess over there my whole adult life. Right now, it's just a mess that's on fire. Mm-hmm. Until that fire goes out, and it may not, it's just going to keep elevated. It's going to keep upward pressure on prices through its impact on, I'll just call it supply chains.
Yeah, I think that's my base case, right? Is that all of this leads to higher energy prices, higher costs generally, because shipping costs are up, insurance costs to insure those vessels are up, and anything that travels through the Middle East generally is at an additional threat, and it just costs more to do all of this. That's kind of the base case as I think about it, which leads to potentially, like you mentioned, higher mortgage rates, higher auto loan rates, higher everything that consumers face. The worst case scenario is different, right? The worst case scenario is more recession causing in the short term, which would be shortages of actual product. And we got there in some countries earlier this spring. I don't know how likely that is, but to me, that's the bigger threat than the inflation part would be, oh yeah, not only are we seeing this, but in fact, we're seeing supply chain issues for all sorts of products because certain countries can't get energy products into their nation.
Yeah,
we're not there now.
Yeah, it seems unlikely to tip the U.S. economy into recession. It's very hard to get to that, and I know you're not saying that. It could make a recession obviously a lot worse, like some of the supply chain, some of the energy shock challenges that we experienced during the 1970s.
I was going to say, yeah, you don't have to go that far back in history to see a very similar parallel here. Let's take a quick break. When we come back, I do want to talk about General Motors, who released their earnings and had a bit to say about where their sales are going and how they're succeeding. That's next here on the Financial Exchange.
Missed a show? You can find them on our YouTube page. The show streams live every day, but every hour is archived, including all of our most newsworthy interviews. Go to YouTube and search for the Financial Exchange Radio Show.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zada from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
When business news breaks, we're talking about it on X. Watch the Financial Exchange every day live on X. This is the Financial Exchange Radio Network.
Financial Exchange streams live every day on YouTube. Subscribe to our page and follow market activity all morning long, only here in the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
All of the automakers, I feel like, have changed their business models a little bit since COVID, and General Motors is speaking to that a little bit in this most recent earnings. The stock's up a little bit in early trading today, up about 3.5%. For the year, it's basically flat, although they did see a big boost in stock price at the end of last year, so up a good 50% if you look at the last 12 months. So General Motors doing just fine. Where they're seeing success, no surprise, you've heard us talk about pretty much every U.S. automaker in this same fashion. Trucks, big SUVs, they are able to charge huge prices, and we seem to have an almost endless appetite for those giant trucks and SUVs, and that's where they make a huge profit margin. So they're doing just fine in that space. The piece that I said about changing their business model a little bit is they are pretty intentionally keeping inventory levels quite low. They are, I think we've all experienced this. I don't know. You did, actually. You bought a car, what, 2 years ago? Tucker, you?
February.
Did you both experience this effect of, okay, yeah, I can't just walk on the lot and demand whatever vehicle and whatever color I want. I'm going to have to search around a little bit more, because that's been my experience in the two cars. I've had to buy 3 cars in the last 6 years due to accidents. So
Mine was due to an accident as well, so I was kind of hard-pressed against time, but I was lucky to find one pretty quick.
But you did experience that feeling of a shortage. I've definitely experienced that with the minivan that I purchased, the Honda Civic that I purchased in 2021, and then less so with the most recent car I purchased because it's electric and there seems to be plenty of those to go around. But this creation of an artificial feeling of shortages seems to be working quite well for the automakers, and they do it especially on their best-selling vehicles. So the highest trim levels of their pickups, the highest trim levels of their Cadillac and Chevy SUVs, they generally produce pretty few of them, and for that reason, they're able to create this sense of shortage. The dealerships probably don't love it, but they're willing to put up with it, and it's helping GM's earnings seemingly quite a bit. Adjusted earnings before interest and taxes this year is going to range between 14 and 16 billion. That's above their previous forecast of 13.5 to 15.5. Obviously not an easy business to make money in, and they're pretty much only competitive here in the United States because China has started to corner most other auto markets, but they're doing quite well here in the U.S.
I don't know many investment in my day job. I talk to people that manage money for firms like the one that we work for, and I've never known an investment manager that they have analysts that cover automotives coincident with their coverage assignments of other consumer discretionary stocks.
Yep.
But none that have ever, I'll just say, none that have ever owned them or been excited about them.
They're terrible businesses.
Yeah, so that's why I have a hard time coming up with anything interesting.
I think the most interesting that I have to say about the U.S. auto manufacturers, Ford, GM, are entirely reliant on giant trucks and SUV gas-guzzling cars that aren't terribly fuel efficient. And so I feel like the most intelligent thing I have to say about these car companies is that they are screwed if gas prices are headed for higher for longer.
Unless they can go ahead, sorry.
No, please.
Unless they can shrink like they've done, keep inventories, they're creating scarcity. No, not quite the right way to look at it, but lean inventory.
It's artificial scarcity, I agree.
They're not, as opposed to the old days where they were compelled to discount aggressively. They're just not making as many, and they're making more per vehicle, and EPS growth has been good. Some other metrics are lousy, but some of the top line stuff looks good.
I just don't think that they have the ability to, for instance, quickly pivot and say, hey, we're going to be a top provider of hybrid vehicles or electric vehicles and in any way compete with Tesla or Toyota in those spaces. I'm not saying that that's where the U.S. car market is going, but they've pretty much abandoned those endeavors and ceded ground to Tesla to a large part, a few other Korean automakers. Do either of these companies make any sedans? I know Ford doesn't. General Motors probably has one or two. Again, this is probably not an issue, but were gas prices to average, let's say, $4.50 a gallon for the next 5 years, I'd be really interested what sort of position these two automakers, Ford and General Motors specifically, find themselves in a few years out. I can't imagine it would be great because we do tend to react pretty quickly to things like high gas prices.
Not to mention what happens when the regulatory regime wheel turns again.
Of course, which it will.
Which is it's going to happen.
Yeah, that is the other disappointing thing about the political state we're in, is that every 4 years we have a complete seesaw in terms of the direction of regulations on all sorts of different things, tariffs, fuel efficiency, etc. Let's take a quick break. When we return, Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trusts. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about, and that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are In positive territory with a rebound at tech as second quarter earnings season picks up steam. Right now, the Dow is up 0.2%, S&P 500 up by a similar measure, NASDAQ up over 1% higher. Russell 2000 is up over 0.75%, 10-year Treasury yield up 2 basis points at 4.62%, and oil jumping 2% higher, trading at $85 a barrel. GM reported better than expected earnings and raised its full-year profit outlook, driven by stronger margins on its largest vehicles and lower tariff costs. GM up by 3%. Meanwhile, Novo Nordisk said it is suing Eli Lilly, claiming that Lilly's advertising for its obesity shot and diabetes injection is misleading consumers. Novo is referring to Lilly's nationwide ads that cite outdated clinical trials to compare the highest doses of Lilly's medicines to lower doses of Novo's drugs, both stocks modestly higher. Sticking with pharma, where Novartis beat second quarter earnings and revenue expectations, that stock up by 5%. 3M jumping nearly 10% higher after the manufacturing conglomerate beat earnings and revenue expectations, and shares in Taiwan Semiconductor are up 4% following a report from Nikkei that the chipmaker will raise prices for its services by up to 10% next year. I'm Tucker Silva, and that is Wall Street Watch.
In retaliation for Canadian treatment of U.S. alcohol and other products, the president is using a Great Depression-era law from the 1930s to impose tariffs on Canada this morning. The tariffs are being applied under Section 338 of the 1930 Tariff Act, which gives the president power to impose duties of as much as 50% on countries deemed to discriminate against U.S. commerce. This law, the provision has never once been used to impose tariffs, according to officials, which makes me wonder just how successful it's going to be in courts in imposing them and what needs to be adhered to. But as I mentioned, never before been used. Tariffs on Canada, should they go into effect, will be on products including milk, hockey equipment, which, I mean, guys, that's all they got, beer, plywood, but would exclude major resource imports such as energy, potash, and critical minerals, which kind of makes you question just how significant this will be on Canadians. We will see where this goes. I don't know, how serious this is. There's been threats of tariffs over Canadian wildfire smoke hitting the United States, and quite frankly, the tariff mess seems to be, how do I describe it? Unpredictable and very uncertain.
Well,
for
their application
businesses.
certainly has been. Whether you agree with tariffs or, like me, you think that they benefit a very small group at the expense of the rest of us, which is absolutely the case, and there are lots of examples historically.
So whether you agree with me or whether you're wrong.
Or whether you don't know anything about tariffs or trade. No, it's true, though. I mean, you'd have to be either an advocate for a specific industry, like the sugar producers, for example, sugar farmers. We raised tariffs on sugar. This is one example. There are so many. Raised tariffs on sugar. We put the candy business, we put them out of business. We used to make candy here, among other things, using sugar. We don't anymore because of 1980s and 1990s era tariffs. Lots of examples of that. Beyond the sort of academic argument for and against tariffs, the way they've been applied here is not productive. I wish the president, we all wish the president would just settle on a tariff strategy and see it through. The reason why economic growth was slower last year by a lot than the previous 2 years, previous 4 years for that matter, if you want to judge it on presidential term performance, the reason why job growth disappeared last year relative to the prior 2 years, one of the reasons why inflation went up last year relative to the year before, is the way that tariffs were pursued. It's erratic. It comes in fits and starts. It's incoherent overall.
Yeah, I think, again, Marc's got his very clear view on tariffs. I tend to agree with the view on tariffs and their impact on productivity.
Well, I'm not really, excuse me one second, it's not really a view. It's more like how they affect the economy.
Sure.
And then you can say, nope, I still like them because I think we should protect
this industry, that industry.
Sorry, I just wanted to clarify. Excuse me.
But even should you follow that logic, the problem here has been that they have not been predictable for businesses. That is, in my mind, the biggest problem with all of this is the rules that were used to pass the tariffs were deemed unconstitutional. And therefore, the White House has been trying to jerry-rig a whole bunch of different systems to temporarily impose tariffs. We're going to be talking about a new, fresh set of tariffs on other countries because the new ones that they put into place, pretty much globally, 10% on different countries, are about to expire. And so, again, just putting yourself in the position of a manufacturing business here in the United States, which pretty much with a high degree of certainty sources materials and goods from all over the world, it's really difficult to be making business decisions right now based on what perceived tariff policy might be 6 months from now. And that, to me, is the biggest downside to all of this, is because Congress is not involved in the implementation of tariffs, there's zero certainty about what those tariff rates are going to look like, and therefore taking out a loan to go expand a construction or manufacturing facility, pretty much unless you're being backed by Google or Microsoft to do it for the purpose of building out AI right now, it's really difficult to paint a path for why I would do that in this economy right now, right? Like, it's just, hey, there's too many questions about not only what will be the tariff rate on goods that I need to import to make a product, but then what sort of retaliation am I going to face when I try and sell my finished product into another market? And so with all of that uncertainty, yeah, thank goodness we're getting saved by kind of the AI moment that we are having right now. I know there's plenty of downsides to that too, but economically, thank goodness that there are a bunch of very well-funded companies that are pouring money indiscriminately into the AI sector.
But the uncertainty had real, I guess the point I'm trying to make, even if you are indifferent to the arguments, the theoretical arguments against restrictions on trade, specifically tariffs, because they favor select industries, usually politically powerful, at the expense of the rest of us. Look at what it did to economic growth and job creation last year. Last year should have been a slam dunk. Mm-hmm. We were coming off 2 very strong years relative to potential growth or trend of 2.8 and 2.9% in 2023 and 2024. It was actually 2.9 and 2.8, but nearly 3. GDP growth, real, year over year. We went from that to 2.1. That's the wrong direction. We went from about 120,000 jobs a month to 9,000 jobs a month. And that started happening, the shriveling of payrolls, precisely when the tariff announcements started.
Yeah.
Liberation, yeah. You could see it in the data. It's crystal clear. So even if you're indifferent to free trade pleas from people like me and many, many others who make them, look at what it did to economic growth and job creation.
I will play devil's advocate for a moment just for the sake of doing so. I can look at that and blame it on the way in which the tariffs were done rather than the tariffs themselves.
That's what I'm saying, Mike. Look, I also want to put the issue of should we be imposing tariffs on this or that country or this or that good aside. There's a way to do that, a process for that. It's deliberative and it gives businesses certainty as to what the law will be a year from now. The key point is the one you already made. Nobody knows what the structure of tariffs will be 6 months or a year from now. And if you had asked us to guess what it would have been today 6 months ago based on what we knew at the time, we would have guessed incorrectly because they've been all over the place.
Let's take a quick break. When we come back, Fed meeting coming up next week. What should we expect out of Kevin Warsh at his second Federal Reserve interest rate decision? That's next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, Mark, we've got a Fed meeting next week, July 29th. Probabilities, according to Chicago Mercantile Exchange, the CME Fed Watch tool, is that there is an 80% chance that they do not do anything at that next meeting in terms of rate moves, and things stand right where they are. Current rates for the Fed sitting between 3.5 and 3.75. When we go look at mortgage rates, they are, as always, considerably higher. 30-year fixed rate average, according to Mortgage News Daily, now sitting at 6.7%. And I guess my first question for you, Mark, is, are interest rates restrictive at these levels?
That's a hard argument.
Let's define restrictive.
So a rate that is a federal funds rate, which is their short-term interest rate, their main policy tool, that is not restrictive, keeps inflation constant and growth at its potential growth rate. Let's call potential growth 2%. And when we say growth, we mean gross domestic product, that number we get every quarter from the BEA. So if rates are neither restrictive nor stimulative, you would expect the economy to be growing at about potential and inflation to be neither increasing nor decreasing. Growth as I mentioned in the last segment, slowed down a lot last year relative to the previous 2 years. That may have helped put some downward pressure on inflation. If you're looking for a silver lining, inflation is not staying still. It's been going up.
Yeah.
To what extent is
that?
that?
We got a little drop last month with energy prices coming back down.
We had energy deflation.
The trend for this year is inflation back up.
Yeah. So the Fed's got a problem, and the Fed's always got a problem. But it's unusually acute in that you've got growth having slowed last year, was sluggish in the first quarter, looks like it's going to be below trend again this quarter if you give credence to the Atlanta Fed's real GDP now estimate. Some private sector forecasters have a more optimistic forecast for GDP, but let's just suppose it comes in at trend.
Yet hiring's been good. Like I know
No,
GDP trend's been.
I'm not saying it's the end of the economic world. Trend is 2% growth. That's fine. That's what we had under Obama that everybody lamented.
Yep.
And myself included. So, it's not, you can't pull growth out of a hat. You've got to create conditions conducive to it and then let the economy do its thing, as opposed to waylaying it with new tariffs every other month or something. That said, it's not a growth emergency. Is it an inflation emergency? We don't know yet. I mean, inflation went from 3 to 4 when inflation peaked with the May CPI report. That's a big jump. Inflation expectations went up. The Fed can get inflation back down if it's willing to impose economic pain in the form of higher unemployment and slower growth by raising interest rates.
Then the second question becomes...
And you asked, are rates restrictive right now, right?
Yeah.
And I should have... I'm sorry, I didn't answer that just very briefly. Fed funds is 3.5. Inflation is 3.5 if you use CPI. Real Fed funds is 0. Most people think real Fed funds neutral should be 1. In fact, the Fed thinks that if you looked at their summary of economic projections. So it's hard to make the case in the affirmative, Mike.
So in that case, then... This article, Bill Dudley lays out the case that the Fed needs to tighten, meaning raise interest rates. Do you agree? Or can Kevin Warsh at this stage still get away with talking tough on inflation? Because that's what he did in the last meeting. That's what he's done in the limited conversations he's had so far.
Yeah, you make a good point. The researchers have concluded, it's not uncontroversial, that more credible central banks, central bank being the Federal Reserve or the ECB or the Bank of Japan or whatever, I'll just say the Fed, the more credibility the Fed's got, the longer it can wait because people's expectations will stay anchored. You and I won't think inflation's going to get out of control. So a key question I can't answer your question right now. My inclination would be to hike a little bit just to prove that I'm tough on inflation. And I don't know that Warsh is going to do that. Because as you reminded me the other day, it's a little too early to sing Warsh's praises too aggressively, as I've been doing. Oh, sorry, but you were thinking it. Yes. A little too early to be too excited about Warsh. He does have to prove, as much as I love the way he articulates the goal of monetary policy, he does have to prove it. And the more credibility you have, credibility is just a short way of saying people believe you're going to follow through on what you say you're going to do, the easier it is to ultimately get inflation down.
Many people assume that if an asset is irrevocable, it's completely out of their hands. Well, that's not necessarily the case. Cushing & Dolan's new guide, Unblocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to retain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. Explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today by calling Cushing & Dolan at 866-848-5699. That's 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
By the way, just one more item on interest rates and where we are. I mentioned that we are now at 6.71%, according to Mortgage News Daily, on the average 30-year fixed-rate mortgage. That is up substantially from where we were right before the outbreak of war in Iran, where we were touching about 6%. Housing inventory had been one of the big topics that we were talking about on the program earlier this year, because it, for the last several years, has been ticking back up to, what are somewhat normal levels to kind of even out the housing market. In June, there were 1.1 million active listings. That would be both single and multifamily homes available for sale. That is up from June of last year, where it was at 1.082 million. Basically no move year over year. I have to imagine that higher interest rates is playing a role in that. And just for some frame of reference, I always cite back to 2019 levels of inventory. June of 2019, 1.22 million homes for sale in the United States. So we still have not recaptured that total level of inventory that we were sitting on prior to COVID. No big surprise there, but that's where we are in terms of the housing market, in terms of data points that I think are pretty important.
Yeah, interest rates, you mentioned at the start of the show that S&P, the price level of the S&P 500 hasn't gone anywhere in 2 months. Neither of longer-term interest rates. They shot up at the beginning of the conflict in the Middle East, went back down, have since shot back up. They're roughly at their highest levels in the post-global financial crisis, that 2008, 2009 recession for us, credit crisis for the world, et cetera. They're right where they were before the so-called GFC. So.
Yep. Yeah, interest rates, I mentioned the S&P 500 in aggregate is about the same place it was in mid-May, as is the 10-year Treasury. We're sitting at 4.622. We were sitting at 4.62 back on May 18th. We've gone full circle, but we've not actually gone anywhere either in terms of interest rates or stocks. And I don't find that immensely surprising given what has happened out of the Middle East. While that might not be the biggest driver of stocks in the short term, it is a huge driver of inflation expectations, interest rates, and what the Fed is or is not going to be able to do here. Stocks continuing to climb as we head towards 11 o'clock. NASDAQ up more than 1%. S&P and Dow up as well, 2/3 and 0.5% respectively. We're going to take a quick break, but a lot more to cover in the second hour of the Financial Exchange. We'll be right back.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations, because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. We've got markets in rally mode here as NASDAQ is up 254 points, a percentage point. S&P 500, 44 points, about 0.2%. And the Dow Jones Industrial Average up about 0.5%, 270 points in early trading. It's been a interesting year for volatility, I guess is what I would describe. The S&P 500 itself has not been terribly volatile, but the amount of volatility underneath the surface, if you will, has been quite choppy. The number of companies that have been trading up and down, the Mag 7, had been pretty rough this year. And the volatility index, the VIX, in terms of choppiness, is coming in at 17.5, which is below the long-term average, but the individual components all over the place. And when you take a look at the divergence between individual stocks and the index as a whole, it's reaching record levels of volatility here in what is already one of the priciest markets in history, which, again, does not necessarily mean bad things to come, just means stock picking has been quite different this year, and in some cases quite successful, and in quite some other cases not so successful at all.
Yeah, that better end up being the case. Every time this happens, active managers meaning those who weight their stocks differently than, say, the S&P 500 index does. You probably have a selection of active and so-called passive or index managers in your 401k, for example. Active managers will claim, this is fertile. This is a fertile environment for stock pickers like us. Whether they are able to exploit it is a different matter, and they almost never are. But they like to make these claims based on periods. I haven't done the work myself, because it's actually not easy to do on correlations of stocks within the index. But if it is indeed the case that they've declined, and that's why indices have been flat while stock volatility is not, then it should, in theory, create a friendlier environment for active managers. We'll see.
Gasoline prices are back above $4 a gallon after spending a few weeks just slightly below. We are sitting at $4.02 per gallon at the national average, according to AAA. I'm rounding a bit there. Oil prices, West Texas crude up about 2.75% on once again renewed hostilities in the Middle East and fresh attacks on Iran by the United States. There's a piece out in the Wall Street Journal today about Israel believing that Iran moved nuclear centrifuges to the Pickaxe mountain range, which I know nothing about, but obviously we're reviewing that intel. And the story for the last 10 days, of course, has been renewed hostilities, escalation in the Middle East, and once again, a place that we have kind of gotten used to at this point with how many? March, April, May, June, now most of July, 5 months into this conflict, where we continue to sit here and have a very difficult time, or at least I have a very difficult time, understanding how we get to a place of de-escalation between two countries that, really we don't see eye to eye on much of anything with the leadership of Iran. And so it remains very difficult for me to see a scenario where we come to some really long-term peace situation without a prolonged and much more severe conflict than what we're dealing with right now in Iran.
So the upshot is continued volatility in not just oil, but other commodity prices. It'll feed through into food and other stuff. And geopolitical uncertainty generally that should, in theory, although equity markets, once they recovered from the initial swoon following the onset of hostilities, have done just fine.
Well, in the short term, AI companies don't care about oil prices. I think, full stop, higher interest rates, all sorts of things could get in the way. But when you have the craze over AI and the spending craze that we're seeing right now, there's very little that can disrupt that, including high gas and energy prices.
Higher risk premium on, and by that I mean the uncertainty, the geopolitical uncertainty, and in part with respect to the price of oil, but more broadly with respect to, say, how much are we going to have to borrow to finance this war? It's going to cost hundreds of billions of dollars. All else equal, that should push up interest rates. The government is competing with hyperscalers for capital. So that's one example in which a premium could be imposed on a particular segment of the markets. Go ahead.
Please.
No, okay. For some reason, I keep thinking I can't follow your lip movements anymore.
Yeah, I hear
you. So there's that, Mike. There's elevated energy prices and upward pressure, or volatile energy prices. So periodic, I'll say, upward pressure on inflation. But inflation uncertainty is associated with higher inflation because expectations aren't going to ebb and flow. They're just going to they're going to stay, presumably stay somewhat higher. So I think the implications of this ongoing conflict in the Middle East, sometimes hot, sometimes cold, are exactly what we've experienced. Higher inflation, more volatile inflation, and in theory, higher risk premia and more volatility, consequently, in equity markets.
Top American AI executives are sounding the alarm on Chinese AI models. This is after a new round of releases from, can't even remember the name of the latest model that was competitive with Anthropic's, but yesterday Alibaba displayed a new model that they intend to release very shortly, and we are clearly in this leapfrog type race and an arms race between the U.S. and China when it comes to AI. And the American executives are pointing out something that I think we've made a point of on the show before, but it comes down to the differences in the way the U.S. system is being funded and organized and how the Chinese system is being funded and organized. And no big surprise here, they are pretty different. Here in the United States, big, deep-pocketed tech firms are funding a build-out of their proprietary AI systems that they hold very closely to the vest and are competing with each other to race to get to the latest frontier on artificial intelligence. And for the moment, it appears Anthropic is the leader there, and they are attracting all sorts of new customers to be part of their ecosystem and use their models that they, own as intellectual property. On the Chinese side, for a few different reasons that I can think of, one would just be a shortage of resources when it comes to AI. They do not have the latest and greatest chips. They arguably maybe don't have the same compute capacity as the United States is building. And so their model has been very different. They have all these labs that are developing AI models. They release them open source, which means that you can go in there, you can study how it was created, you can look at what factors they put in there, and then you can study the output. You can even take the model itself, download it, put it behind your own server, and customize it. It's that open source. And there's a number of reasons they might have done that. One of them is, hey, we as a society, the Chinese, want to develop the latest and greatest model, and the only way we can compete with the United States and do that is by pooling resources and allowing these different labs to, lean on each other in terms of understanding how they do these things. The other one might honestly just be that nobody would be willing to trust a closed source Chinese AI model. There might be all sorts of concerns about what's influencing it, how is data going to be used, et cetera, et cetera. I think it's probably both of those things, and then maybe some twinge of communism in there of, hey, we as a society are developing these models to compete with the U.S. rather than individual companies. Take your pick in terms of which one is which. The threat, though, to U.S. companies, why they care about this, so far as I can tell, I believe it is purely a profit threat. Right? When we think about these latest and greatest AI companies here in the United States, their goal is to gain customers, paying customers, mainly businesses, to use their products and pay them a whole bunch of money. And by and large, they've been fairly successful at attracting customers and doing all of that.
Isn't that just the enterprise software model, by the way? Isn't that like do what Microsoft did for Office, but do it with AI? License it, improve it every year. So it sounds familiar.
And where I think the threat becomes is if Chinese models remain open source and I'm XYZ company, and let's say I want to use AI for some pretty basic tasks. I want it to be able to pre-fill forms, analyze customer data, but I don't need it to code at an incredibly fast pace or, come up with brand new drug formulas that I'm going to be testing in a lab. I'm just using it for pretty basic functionality. The question becomes, why do I need to pay Anthropic for this cutting edge model when I can go to a Chinese tech company, take their model that is open source, download it, customize it myself behind my own firewall, and do it for 1/10 or 1/20th the cost of what it would cost me to do the same thing.
But you're not going to have.
OpenAI
You are a
or
businessman. You do buy software, and you're not really going to have a choice. You're going to get whatever the vendor of your customer relationship management database chooses to integrate into its software, right? Like you're not buying AI. You're buying a word processor. You're buying a CRM.
Today I am. I'm not sure that 12 months from now I am.
You think you'll buy AI separately and then we're going to try to integrate it?
I mean, that's the entire reason that a bunch of software stocks have sold off.
I don't know how to do that for you, Michael.
Yeah, I know you. I don't either.
I know you don't.
But I think
that's a conversation.
But I think that's the entire point of why all these software stocks have sold off so dramatically over the course of this year is that is the literal threat. Is why do I need a CRM when this large language model is going to do that for me? I'm not sure I buy it, but that's the threat. And so I'm sure that these American AI companies are going to shroud this in national security concerns, which they should. I don't necessarily think that U.S. domiciled companies should be using Chinese AI models, but the real threat I don't think comes from that, because you can look at an AI Chinese model and find out what's in there. And you can also, today at least, download it and make sure that there's no feedback going back to that Chinese AI company. The real threat, as far as I can tell, is a financial one. We won't have the profits if companies start using Chinese AI models. We need them to stay domestic. We need them to use big U.S. AI developers and not the extraordinarily cheap Chinese government-funded AI labs instead. Let's take a quick break. When we come back. Let's talk a little bit more about this Chinese AI story. I think it is a really compelling piece. And again, if there is any competition to the U.S. system, it is the Chinese system, as has been the case with pretty much every big economic push we've seen in the last few decades, whether it's automotives or other new technology. Let's take a quick break, and I want to talk a little bit more about the Chinese AI system and what they're considering next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. If you're not able to participate, you can still support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
We were talking before the break about Chinese AI systems and models and their means of developing them versus, the U.S. model, which is closed source, competitive, versus Chinese model, which is open source. What's the opposite of competitive? I'm sure they are competitive, but kind of pushing all in the same direction in the Chinese AI labs. Yeah. And the follow-on story here from the Financial Times is that the Chinese government is considering some export controls and limitations on the transfer of their models to overseas companies. So we talked before about, my view would be the big threat that U.S. companies in the AI space are detecting from China is that, hey, they're basically giving this stuff away for free and we can't continue to produce it if we don't have customers. I think the Chinese are detecting that too, that, hey, we are producing some pretty valuable stuff and we shouldn't just give it away. And so they are potentially talking about restricting who can download these models and use them behind closed doors. I do wonder how much of a real threat this is, Marc, because we were talking before the break, like the average U.S. consumer, if you said, hey, you can now buy, what are the big Chinese car brands that are out there? I kind of forget the name. BYD is a major one.
It's the only one I know.
I get the sense that if all of a sudden you could purchase a BYD vehicle here in the United States from a dealership with a warranty attached to it and actually get it registered, there's a wide swath of Americans who would be perfectly willing to do so because it'd be incredibly cheap, reportedly quite reliable and a good car. But we don't allow that for obvious reasons, all sorts of security risks that we think of here, including the ability to put U.S. automakers out of business. So we don't allow that. I am not sure that a bunch of businesses would be willing to take the security risk of saying, yeah, I'm just going to start using a Chinese artificial intelligence model. Like, it's one thing for it to go to a consumer and say, yeah, this consumer product is, 70% cheaper. And I mean, Walmart's built an entire business model on it. When you talk about a financial services company or a healthcare company, or forget all of that, an architecture company that does not, deal with customer funds on a regular basis, I don't know that any of them would be willing to withstand the reputational risk of allowing a Chinese-made software.
That's part of the market. We're talking about people that buy software as a service.
Yep.
They're going to buy whatever version of AI. Nobody's going to ask what AI Microsoft is using. They trust Microsoft.
Sure.
Or Salesforce or whoever your vendor for a particular type of software is. But when it comes to your refrigerator, you may not ask, you may not care. I want it to
the cheapest one.
I want and it's probably going to run some open source Chinese, just like it runs some Chinese programmed. So, I don't mean to say that demeaningly. It makes sense. I don't know who programmed the chip in my microwave or my oven or what I don't know why I'm just giving appliance examples. Automobiles, same thing.
They're all made in China.
Because they're all made in yeah. Right. No, it's true though. So there are plenty of consumer products that will run on the cheapest software. You're not even going to know what's in it. You're not going to care. But if you're in a high-profile position, concerned about reputation risk, or whether it's your firm's public reputation or your own, you're going to buy from a vendor who has the good housekeeping seal of approval.
Is that a U.S.-centric viewpoint? Right? Like if you're a European tech company, do you feel the same way? Right? If you're in charge of IT for some of the largest German companies. What are you buying in your example?
Could you be more? I don't know. I don't even know why I'm asking. I don't have.
I'm an IT security provider in Germany, and I provide IT solutions to major corporations there.
So you're recommending software.
And I'm recommending software. And, I have a business of building out customized AI models. Am I necessarily trusting the Chinese model enough
maybe
to
not
use it
in
over
that
the U.S.?
example.
I don't
Maybe
know.
not in that example, but there are plenty of examples I can think of. The headphones that we wear, which
Sure.
are increasingly sophisticated, et cetera, that don't represent the same risks that you're talking about, where it could easily be used.
So we will see. Again, this is pretty cutting-edge areas, and by all accounts, the Chinese are not very far behind in terms of their model development, but will we see those in the U.S.? Would companies trust them? Or, even outside the U.S., would they trust them is big open question. Let's take a quick break. When we come back, I want to talk Wall Street Watch and then Jamie Dimon's latest thoughts on the market. That's next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing and Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory with a rally in tech as we're seeing more second quarter earnings stream in. Right now, the Dow's up 0.2%, S&P 500 now up over 0.75%, NASDAQ up 1.2% or 324 points higher. Russell 2000 is up about 1%, 10-year Treasury yield up 2 basis points at 4.62%. And oil up 2% higher, trading at $85 a barrel. General Motors reported better than expected second quarter earnings and raised its full year profit outlook, driven by stronger margins on its largest vehicles and lower tariff costs. GM shares are up by 4%. Meanwhile, Novo Nordisk said it is suing Eli Lilly, claiming that Lilly's advertising for its obesity shot and diabetes injection is misleading consumers. Novo stock is dipping while Lilly stock is up over 1%. Elsewhere, SpaceX rebounding 7% and on pace to snap its 7-day losing streak after the company announced August 4th for its debut earnings report. 3M jumping by 9% after the manufacturing conglomerate beat second quarter earnings and revenue expectations. And shares in Taiwan Semiconductor up by 4% following a report from Nikkei that the chipmaker will raise prices for its services by up to 10% next year. I'm Tucker Silva. That is Wall Street Watch.
Fidelity is the bearer of bad news today for American retirees who now are going to likely see $185,500 needed for their retirement health care costs for the average person turning 65 this year. That's up from an estimate of $172,500 last year, a 7.5% jump, and the largest jump since at least 2015, when prices soared by 11.4%, according to Fidelity. What they are looking at here are some of the, in my mind, most overlooked costs of retirement, but they're looking at your presumed Medicare premiums, which for 2026, the cost of a Part B Medicare premium, the base cost, assuming you're not subject to the income-related monthly adjustment, comes in at $202.90. Part D premiums all vary depending on the type of plan that you choose. But their point is that, hey, when you combine those Part B and Part D payments, that's only about half of the total estimated costs for healthcare in retirement. And the real kicker on all this has nothing to do with long-term care costs. So what they're really talking about is true health, pharmaceutical, drug plan payments, hospital doctor visits, all of those things. They're expecting to cost the average retiree $185,500 during their lifetime. And then on top of that, if you need assistance because you fall or need to be in an independent or assisted or nursing home facility later in life, that is on top of the estimated $185,500 that they're talking about. And the point that I would make about all this, I guess, is this has been a cost category that has risen dramatically over the course of the last couple of decades, and I see no reason why it would slow down. Unfortunately, baby boomers, you are a huge population. You are going to need increasing levels of care at the same time that there are not enough people in that sector to provide that care. And so unless I'm completely missing something on robotics and automation that is going to make somehow healthcare pre-nursing home way cheaper, I tend to think that we're going to continue to see healthcare related inflation for retirees at 5% plus for the next couple of decades as just more and more baby boomers retire and need elevated levels of care. I don't really see many ways around that. Plus, we have all sorts of new innovation in the drug space, which is fantastic. The stuff that we're seeing with GLP-1s is extraordinary, but really, really expensive. And so where I see mistakes on this front, one, I don't think the average 55-year-old has much of an understanding of how Medicare actually works, what the costs look like, what it covers, the different options that you have to select from. Like the average American, I think, has 30 plus choices when it comes to different, health insurance plans at 65. So it's really complicated. Two, I think a lot of people just take the headline inflation number and say, hey, this is what it's going to be. I'm going to need 2% more every year to cover my costs. That also has not been the case, especially if the majority of your costs are coming from health-related expenses. And so understanding how to model that stuff out, understanding how to account for it, and ideally how to position your income and assets so that you're not only minimizing your taxes you have to pay, but also minimizing how much you have to pay in health insurance costs can make a huge difference to your retirement plan. If you have questions along those lines, I know we've published guides about how Medicare works, how IRMA works, Social Security taxes, all of these things for retirement. But if you have personal questions about your situation, if you're heading to retirement and trying to model out how much you need to have saved for unexpected costs like this, give us a call at Armstrong Advisory Group. The number is 800-393-4001. You can book a time for us to call you back at armstrongadvisory.com. But that phone number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It's another Tuesday, so Jamie Dimon is out with his latest doomsday scenario on markets. Quote, Jamie Dimon says markets underestimate risks and he wouldn't buy stocks or treasuries at current prices. So I'll back off by saying first, reasonable position to have, right? I don't think that's a crazy position to have when we were talking about this morning, Marc, before we went on air, Cape Schiller, Cape price, Cape means price to earnings, but Cape ratios on the S&P 500 are among the highest we've ever seen, only surpassed by the pre-dot-com era. Other measurements of price in stock markets are quite high. We're facing really bad deficit issues, and there's a path for interest rates to go a lot higher. I understand how Jamie Dimon in particular and JP Morgan gets to this viewpoint, but gosh, it's got to be tough working for him. Imagine you do what we do as a branch financial manager at a Chase Bank that works for JP Morgan. I'm going to sit across from a client and tell them, oh yeah, I think that this balanced portfolio of stocks and bonds is right for you, at the same time that our CEO, and by the way, one of the most famous people, maybe only surpassed by Warren Buffett in terms of financial circles today, is telling you that he thinks it's a bad idea.
Yeah, he's got a high profile. More people will read about this than see all the advertising JP Morgan is doing this week.
Quite possibly.
They have a lot of equity managers on their payroll. JP Morgan, in addition to being a bank and underwriting issues of stocks and bonds, they manage a small portfolio. Even post Volcker rule, they still have still do a little bit of proprietary internal trading for themselves, and they have a lot of strategies that invest in stocks. So obviously it's
it
not.
does put
it's
the
not
company in a precarious position, right? Like
it puts their marketers in a tough spot. Yeah.
Not only the marketers. Like if I believe I'm doing a fiduciary, I have a fiduciary duty to my client. And
you're talking about their advisors. I'm sorry.
Well, their advisors, their portfolio managers, everyone throughout the
I wasn't even thinking
bank,
about their financial advisors.
Like I simultaneously have a fiduciary obligation to my client when I'm putting them in stocks and bonds at the same time that the CEO of my company, who in a lot of ways injects and informs the opinion of the overall institution, is saying publicly that he doesn't think that stocks and bonds are a good investment. That's got to be challenging.
Yeah, some creative litigator may at some point, if a client loses money,
a
client who took
hey,
the
your
advice
CEO
of a
said
Morgan
don't do this. Why did you do it?
Yeah, right. I didn't even think about that angle.
Yeah,
I was thinking about their equity managers who are in a similar position, but they're not necessarily fiduciaries.
True.
His larger point, though, is, as you said, a reasonable one. Stocks, by any measure, are trading at extreme levels relative to recent and longer-term earnings. And you could say the same about bonds, though the way you get there is a little bit different. So he makes a
different measurement.
Yeah, he makes a totally level-headed point.
Yep. But a lot of it is probably just to grab media attention, and it worked. We're covering it. It was covered by CNBC.
Yeah, but to what end, though? I mean, this is not good media attention. And if I'm Morgan Stanley or one of their competitors, Merrill Lynch, a big army of financial advisors, tons of actively and other managed equity strategies, I could use this to sell against them this week. Hey, their CEO is down on America. We're not.
Yeah.
It complicates things for the people on the front line.
No doubt. Let's take a quick break. When we come back, playing a little bit of stack roulette next.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zada from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
It's time for a bit of stack roulette here. Mark, do you mind if I kick things off? So since we will not be voting on rent control here in the Commonwealth of Massachusetts this year, I wanted to highlight other dumb ideas in housing, because I do just love looking at dumb ideas in housing. And New York City's been chock full of them recently, with their new mayor exploring new ways to get rent down, including all sorts of new regulations for rent control departments and what they're going to be doing there. But the proposal, which is part of Mamdani's 23-point rental ripoff report, which I'm just learning about now, would force landlords to only do one of two things to verify tenants' creditworthiness. They can either require a credit report that the landlord themselves needs to pay for, or they can request a proof of income from the applicant, but not both. So you may not, under this new rule that he wants to impose, allow, as a landlord, get proof of income and a credit report. You can choose one or the other, but you cannot use both in your decision around whether or not to offer a lease. To which I would just say that all that would do, if I were a landlord in New York City, which I'm not a landlord anywhere, but were I a landlord, I would increase my standards for whichever of those two reports that I'm going to get, right? If I can have less information about my potential tenant, and previously it was going to be I need to have income verification of $200,000 because it's New York City and Manhattan and that's what I require, and now I also can't get your credit report, then I'm going to say, you know what, it's got to be $300,000 now in order to make this work. So this is just a silly new regulation that is going to probably make the problem worse rather than better. And if any mayor or governor or president wants to increase housing affordability, there is one really good way to do it, which is to create the conditions for more housing construction, which in areas like New York City and Boston and San Francisco and pretty much everywhere is very costly, difficult to get permits for, and tough to actually do. So instead, we've got fun ideas like this one, which are just going to it's not going to backfire in spectacular fashion because it's not such a dramatic change that it's going to completely upend the housing market, but it is only going to result in one thing, which is more empty apartments, higher standards for renters, and all sorts of things. I actually ran across a scenario the other day of somebody renting in, it was either New York or New Jersey, I don't remember which, but they were able to provide income verification as a couple for income of over $300,000, and the landlord required a parent to co-sign the lease. I don't know how much this apartment cost, but $300,000 of income. And the landlord said, that's not quite going to get the job done. I'm going to need one of your parents to get me some income verification as well. So don't get me wrong. It is a challenging place to rent an apartment in New York City, but this rule is not going to make it any easier.
Well, yeah, it works to the detriment of people who are credit worthy.
Right. Yeah.
I want to share as much information as I can.
Maybe you voluntarily can. I don't know if that's the case here, but the landlords can't demand it.
Well, then in that case, you pull up Credit Karma and you show them what your rating is.
Good point.
On average, your rent should be lower. Security, the risk is low. We talked about risk premia earlier. That concept can apply to lots of different assets and transactions. It's to your advantage to be totally forthcoming if you're a bankable credit.
I don't think it ever passed, but in fact, in Massachusetts, there was a bill to prohibit employers from reviewing credit reports on potential candidates for employment, which again, less information is going to make it more burdensome to hire and things like that. But nonetheless, that's where we're headed.
Yeah, right. Okay, yeah, that's where we're headed. This is the era of dumb economic ideas.
Yeah.
From tariffs and taking shares in public companies like the Republicans are now doing. And if that's a surprise to you, yes, it's happening. They've owned shares. We now own shares in 25 companies. Imagine what a president AOC will do with those, God forbid, to other restrictions on the ability of people, consenting adults, to transact for their mutual economic benefit. They all make us little by little worse off over time.
Yeah. What do you have for us?
I wanted to combine Dimon's comments about, his comments were extreme about
he doesn't think it's a good time to buy stocks or bonds.
I think
right
a
now.
better way to put that is stocks are expensive. Historically, in periods following a quick run up in stock prices, returns have been lower than average. That's not controversial. So combine below average returns with medical inflation of 6 or 7% a year, which means that 200, I'm rounding up from 185. That's doubling every 12, 10, let's just call it 10 years. Use the old rule of 72. Where are you going to go to ensure that whatever you have set aside for those premiums that you talked about, Mike, and other assets that will be used to defray medical costs, what are you going to invest in to ensure that those keep up with medical inflation if indeed stocks are set to return something lower than their long-term historical average? I'm not saying negative. I'm just saying low to mid single digits. That may not even be enough to keep up with rising medical inflation.
It very much calls into question the 4% rule that's used in financial circles when doing planning for retirement all the time. The 4% rule, if you're not familiar, coined, I think, in the 80s. 50-50 portfolio of stocks and bonds. Should you pull 4% of that balance out per year and plan on that for a lengthy retirement, then there should be no scenario that would run out of money in that case. But yeah, if you now have below average expected returns for a decade plus out of both stocks and bonds, then it does call into question all sorts of strategies that have been previously used to support American spending habits. As we head towards the noon hour, markets are accelerating upwards here. We've got the NASDAQ now up 323 points, 1.25%. S&P 500 up 59 points, 0.8%, and the Dow Jones Industrial Average up 374 points, 0.75%. Interest rate on a 10-year Treasury now sitting at 4.626, and that crucial barrel of oil up 2.6% today to $85.41 per barrel. We will be back at it tomorrow for a heavy earnings day. Stay tuned. Have a great rest of your day. We'll see you in 22 hours.